What stocks should I buy now? How much should I invest? If these are some of the questions that have always bothered you, this may be an interesting video for you. Let's get started. In the last video, we went over at a high level the important steps to follow to build a successful long-term investment portfolio. One of the main points we discussed was about investing small amounts of money every week or month instead of investing large amounts in one go. I will now cover this topic in a little more detail and try to address some of the common questions that investors have, especially if they are beginners. I'm from Canada, so I'll use the term dollars in all my videos, but the concepts discussed will pretty much be applicable to your country and currency as well. Now, let's say you have some $10,000 saved up in cash and have been hearing from some friends that the stock market is great for multiplying wealth. Maybe you even tried your hand at stock trading and had decent results on one or two occasions. So it is not uncommon that you want to find some hot stocks and invest the $10,000 in them in the hope that it will continue to appreciate in price. However, it is usually not a good idea to invest your hard-earned money without proper groundwork when the market is at an all-time high. Also, making a few successful trades over a month or two wouldn't mean anything for your long-term investing success. So how do we go about understanding how much to invest, when to invest, and what to buy? The first thing to figure out is your disposable income that is available for investing. This is based on your earnings and monthly spending habits, and you should also consider in your calculations the money you may wish to put away for any emergencies. Just because you've saved up $10,000, it may not mean that it is available to risk in the stock market. It should really be your life circumstances that should determine how that money should be used. Let's look at an example. Let's say you started working 2 or 3 years back and have $30,000 in debt, say student loans, credit card dues, car loans, etc. If this is the case, it is very important to first focus on reducing this debt burden before you even think of investing actively. I'm not saying you shouldn't invest at all, but focus on using the majority of any cash available and any monthly savings to pay down your debts first. So you could use this $10,000 first towards your loan and then say $700 out of your additional savings of $1,000 every month towards the loan as well. The remaining $300 every month can be used to build up your long-term portfolio. This $300 may not sound like much, but here's the thing. It will certainly matter in the long run. Also, over time, usually your disposable income would increase and you will hopefully have more money left over to put to work every month. Now that we have discussed how to assess the amount available for investing on a periodic basis, the next natural question will be about what assets you should be buying. Unless you have, say, $4,000 or $5,000 available to invest every month, or already have built up some sort of a portfolio, some of the more advanced portfolio management strategies, for example using options, may not be relevant for you. So I will cover these advanced topics in future videos, and for now we will keep things simple in this video, assuming you only have a smaller amount available every month to invest. Also, we will focus on stocks specifically in this video and keep other investment vehicles like commodities and bonds to later discussions. When analyzing what stocks to buy, it is very important to first clearly understand that you are actually considering buying a part of a business instead of just thinking of a stock as some virtual asset just going up and down in price due to the demand and supply in the stock market. To make it more clear for beginners, let's try to understand what a stock actually means. Imagine you eat at a small local restaurant every week and really enjoy the food there. You also notice that the restaurant is always busy, but the customer service is of top quality and everyone seems to have a great time there. You know that the owner is also a very nice person and always works very hard on keeping his customers happy and adding new menu items and other cool innovations from time to time. On one of the days, you end up talking to the owner casually and find that he or she invested $50,000 into this restaurant and on average over the last 10 years has been making a net profit after all expenses of about $10,000. The owner never borrowed any money from the bank to run the business, but had partnered with others before to expand the business over the years. You also come to know that the owner is now looking for someone to invest another $50,000 in this restaurant in order to expand the business even further. You hear out the plan in a bit more detail and like it even better. Now, after reading through the entire business plan, you jump up at this opportunity and decide to partner with the owner and invest $50,000 in the business. This is, of course, a very simple example, but at a high level, this is exactly how a company's stock is born and evolves over time. Just like the restaurant in our example, companies invite the public to invest money to take part ownership in the company. For each part of ownership that you pay for, you get a stock, or in other words, a share. Unlike the restaurant in the example, where two people owned 50% share each in the business, a company typically issues millions of shares or stock at a defined price, which tens of thousands of investors buy. These investors who buy the stock can then choose to sell the stock in the open market to other investors and traders if they wish. To make things a bit more clear, let's say the company we are talking about is Starbucks. Just like with the restaurant, when you buy a share of Starbucks stock, what you will be getting is part ownership in Starbucks, which means you are entitled to a part of all the profits Starbucks would generate over its lifetime. Now the question is, how do you buy the stock in the first place? Probably you all know that you can buy the stock through your brokerage account. But that does not mean you are directly dealing with Starbucks to buy the stock. The beauty of the stock market is that you or any other investor can freely buy and sell the stock at the price the stock is trading for on any given day. But remember, this doesn't mean that you just go out and buy some Starbucks stock today. Absolutely not. That's where your research comes into play before you put in your order. As you may already know, the price of Starbucks stock keeps going up and down every day, every week, and over the years. So what you actually need to research is to find answers to questions like, does Starbucks have good products that customers enjoy? Is the business model of Starbucks sustainable? Is there a good management team in place? What are the growth prospects? Is the company investor friendly? Does it have too much debts? Are there any major risks lurking on the horizon? Is Starbucks a profitable company? And at what price is Starbucks worth buying? If you look at these questions and go back to the information that you reviewed before deciding to partner with the restaurant owner, you will find that there are lots of similarities between investing in a very small business and investing in stocks. That is why it is much easier to invest in stocks if you understand this fundamental logic. Once you are aware of this, you will never buy a random stock just because it went up 50% in the last month. You will always try to understand more about the underlying business that the company is involved in before deciding to invest. Okay, this all sounds great, but where can you get answers to all these questions? Thankfully, we are all so well connected now because of the internet that you can get all the information you need from the comfort of your home. If you take your time and spend a set number of hours to review each stock you are interested in, you will do very well over the long term. I will also make a series of videos in the coming weeks to provide you more details on how to go about your research, starting with the company's annual report to more complex topics to understand what price a stock is worth buying. Hope this video was helpful in answering some of your questions about investing. As a friendly disclaimer, I also want to mention that I am not a registered investment professional, and this video is only intended for providing you my insights and for your entertainment. So please consult your investment advisor before investing any money. Thanks for your time. If you enjoyed this video, please click on the like button and subscribe to this channel. And please leave your comments and any questions below, and I look forward to talking to you in the next video.